This conference will now be recorded.
Yesterday I was just going through the convergent billing, uh, the help document, SAP help document. So I just went through quickly. Today, once again, I will go through. I got some idea how it is doing. I will explain tomorrow, but I don't have screen actually. So the process, already you are working, but from if anything you require in that area, I will just tell you what I can understand. It may be helpful to you. From the invoicing part of it. But otherwise, FICA, we are doing as it is. There's no problem. Okay, fine. So we have been discussing the enterprise structure, and then we worked on the organization structure for FICA. And in terms of master data, we have done with the business partner and the contract account. Now, contract is more central to ISU. Okay. So basically, contract is a specific master data what we capture in ISU as a subsequent action of the move-in process. When the move-in is done for a business partner, when the move-in happens in a particular premise, having particular connection, the move-in document will be created. And as a result of move-in, the system will prepare a contract. The contract is basically a division-specific data. That means the partner is moving in and thereby going to avail the connection of electricity. For electricity, there will be a contract created, and contract is the basic framework or basic prerequisite for doing the IS utility billing. So in billing, we do actually contract billing. So the contract billing is done, and then invoicing, and then FICA document will be posted. Okay, but in some other solutions where FICA is used, the contract may or may not be necessary. But as I understand the way you told me and also what I saw in convergent billing also, there is a contract and it is called as an agreement actually. That is what we are billing, invoicing, and the FICA document will be posted. So here what we're going to do is we are trying to post a FICA document through various sources without referring to a contract. Initially to understand the understanding of the what kind of transactions you can post into FICA, then definition of main transaction, sub-transaction, account determination, tax determination, basic settings we'll set it up, and we will prepare some documents posted to FICA directly, like sundry receivables or other receivables. Okay, then you can understand the nature of posting, reconciliation key, how to transfer the data to financial accounting, and we can use these FICA documents in future for various other processes like interest calculation, dunning, okay, or write-off or installment plan that way. So basically the journey of the FICA will start from the time FICA document is posted. And the source of FICA document, as we have spoken earlier, it could be anything. It could be an invoice coming from ISU. It could be a invoice coming from sales and distribution, or it could be invoice coming from convergent invoicing, or it could be even invoice coming from a insurance or any other source application. So we will be working without any ISU invoice, how to post to FICA first, and then we will also configure minimum essentials in ISU without bringing contract into picture. Yes, contract also will come into picture, wherein we do move-in process and contract is created. Using some billing configurations, we will see how to do billing in ISU and then invoice it and then post to FICA. And we will also configure sales and distribution so that we can create an order, delivery, billing, and then invoicing. But in SD, billing and invoicing, they are one and the same. The moment to prepare the billing document, it is actually a invoice what we are preparing. Okay, and then this invoice can be posted into FICA. Okay, basically there what we do, whatever business partner we are creating, we will also make the system to create business partner acting as a customer. Okay, so the customer number and the business partner number will be the same, and we are going to use that customer in SD process. Okay, where we have delivery related invoice or a service related invoice. But when you prepare the invoice and post, it is not going to post to customer account receivable. In fact, we are not going to maintain any company code data for the customer. We are only maintaining sales area data so that when invoice is posted into, you know, FI, it is not directly going to post to FI. It is going to actually post to FICA, and then from FICA we're going to transfer data to financial accounting. So we have come to now a level where you can start working with the transactions and account determination, structure of the transactions and determination of GL accounts, tax determination, and for this customization. Okay. Basically, understanding the transactions will help us how FICA document is posted, and for these FICA documents posting, how the accounts will be determined, and also when you are doing the sub-transaction account determination, we also require the tax determination. So we will know how to define the tax code and maintain the GL account determination. This basic customization we have to do, but this is repetitive. For every scenario, the transactions will change, account determination will change. Although the structure of the FICA document will remain the same, the FICA document itself is posted because of various kind of transactions. Okay, and that is what we are trying to understand. So once you set up the basic structure, we'll start working on the documents in FICA. What kind of documents you can post and how you differentiate them, and allocating number ranges to the FICA documents, and then actually creating and posting a FICA document and clearing of documents and customization. Okay. So first we'll start with the transactions and the account determination, and then structure of the transaction. Now, basically when you say transaction in SAP, always it means we are recording a business process in SAP. Okay. So basically when you say transaction in SAP, like one is master data, we maintain master data. Then comes the transactions. The transactions in SAP mean the business process. We are mapping a business process. We are mapping a business process into SAP. Now, in every application, we process different types of transactions. Like in sales and distribution, we process various sales transactions like inquiry, quotation, sales order, contracts, okay, or preparing a delivery document or preparing a billing document. Okay, these are all the transactions what we are posting in sales and distribution. That means it is application specific. Likewise, in we create purchase order, invoice verification, goods receipt, goods issue. These are all transactions what we do in In production, like creating a planned order or a production order. So this means basically we are recording the business process in SAP using a transaction. Now, transaction itself is processed using a document. That means document will provide to enter the data necessary for processing the transaction. Most of the time, the data in the transactions will get copied from the master data. In order to create a transaction data in SAP, you require adequate, prerequisite organization structure data and also master data. And a certain customization should prevail in the system. If all these are available, we can process a transaction. For example, if you want to create a sales order, we must be ready with the customer master, then material master, pricing procedure configuration, shipping point determination, material master should be available, and then also tax determination. All these configurations, if you have done, master data is maintained properly, we can create a sales order. Okay. Likewise, when you are processing a transaction in FICA, we require certain master data, business partner should be there, contract account should be there, company code should be there, and then the FICA document relevant configuration should be there. And based on that, we are going to post a document in FICA. Okay. Now, basically, the source document can vary. That is the reason why you can post a document into FICA can vary. But invariably, depending on the activity what you're doing, a certain transaction will be processed in FICA. That is, FICA posting will happen. Okay. And this FICA posting is recognized by two important parameters. Okay. That means every time you post a document in FICA, the FICA document is held by two important parameters. One is called the main transaction. One is called main transaction, and another one is called sub transaction. One is called main transaction, and another one is called sub transaction. Again, in the main transaction, sub transaction, there are two types of transaction. One is the external main transaction. One is external main transaction, and then you have internal main transaction. External main transaction and internal main transaction. Likewise, you have got external sub transaction, and then you have internal sub transaction. So we have got main transaction, sub transaction, but categorically speaking, we have external main transaction and internal sub transaction, and there are also internal main transactions and internal sub transactions. Now, the purpose of these two transactions are varied, actually different. The main transactions are defining upfront what is the transaction we are processing according to the end user perspective. Okay, that means they are doing some process because of which the FICA document is posted. Okay, and that is recognized by the definition of the transaction what you are posting. That is given by the definition of the main transaction. And main transaction is also used for account determination, which is called reconciliation account determination. Sub transactions basically tell us about the individual line items that we are calculating under a main transaction. Basically, these are revenue items. Okay, revenue items could be price, discount, tax, freight. Whatever charges we are charging to the customer, each charge what we are calculating is done through a sub transaction. Okay, so the sub transactions occur within the main transaction. So whenever you define the main transaction, it is an independent definition. But the sub transactions are defined in the system with a reference to a main transaction. One main transaction can have one minimum sub transaction, or there can be multiple sub transactions. So sub transactions are not defined independently. They are defined for a particular main transaction. Sometimes the same sub transactions can also appear in another main transaction. Okay, that means sub transactions can be repetitive. They are not only used under one main transaction, but they also can be defined under another main transaction. Okay, the purpose of main transaction is to set up most of the time the account determination. Okay, but although it is not necessary always, there are certain main transactions in ISU for which there is no need to do any account determination, but they are available. Okay, they are required because they are defining the physical structure of the document. The sub transactions are actually used for revenue account determination. The account determination for revenue accounts like GL account, like for price, the taxes, any other charge like standing energy in case of electricity, the rental charges for the electricity, or if you are using, let us say, sales order. Okay, sales order is basically, you can say, a document in which you are calculating various conditions like price, discount, freight. Okay, so these are basically sub transactions. Okay, so essentially the main transaction defines the definition of the transaction what you are processing, and eventually we will use the main transaction for the revenue account determination, and then sub transaction defines the items that we are calculating. Okay, now let me give you one simple example so that you can understand. Suppose, let us assume I am posting a FICA document directly. Okay, I am posting a FICA document directly. That means I'm not coming via any invoice process. Okay, there are so many processes where you post directly document in FICA. One is, miscellaneous receivable. Okay, miscellaneous receivables or sundry receivables. Now, this itself will become the definition of the transaction what you are processing in FICA. That means you are posting a document in FICA because you are posting something called a miscellaneous receivable. So you can define one main transaction as miscellaneous receivable. Okay. But when you are posting the FICA document in the miscellaneous receivable, you are obviously charging certain amounts to the contract account. So under the miscellaneous receivables, what is that you are posting to the contract account? That means individual charge amounts. Okay, these charge amounts are defined by the sub transaction. So if I define miscellaneous receivable as the main transaction, under this main transaction, I can define one or several receivables. Okay, let's say under miscellaneous receivable, I will say the price of the product or the service. Okay, price of product or service. This is one thing I could be charging. Second could be like say installation charges. Okay, installation charges, installation charges, and then we may say the packing and forwarding charges, packing and forwarding charges, or it could be like this is basically packing. Sorry, packing and forward charges. So there can be so many charges we can calculate under the main transaction. Each of them you can define them as a sub transaction. Okay, that means whenever you run a main transaction, certain calculations we are doing. Let us say in this case, three calculations I'm doing: price of a product, installation charges, packing and forwarding charges. Okay. Now, individually, the charge will be given for each of the sub transaction. The total amount actually we are supposed to debit to the main transaction. Okay. But in the case of direct posting into FICA, it cannot consolidate. So what it will do, it will recognize each sub transaction as a posting to contract account. Okay. That means suppose you calculate the price of the product as 5,000 rupees. Okay. This is what we are charging to customer. Okay. And then installation charges are 1,000 rupees and packing forwarding charges are 500 rupees. Okay. We are supplying a product for which the price is 5,000 rupees. The installation charge for the product is 1,000 rupees and the transportation charges are 500. Okay. These are revenue items. Suppose you are doing SD transaction for this, then total amount what customer has to pay will be 6,500. And that amount actually customer has to pay. So what actually do in scenario, the amount will be debited to the account holder because it's a receivable. Okay. Actually what it means, each sub transaction we are debiting to customer account. That amount they have to pay to us. So it's a debit entry. Okay. So for each sub transaction we maintain in the configuration, is it a debit entry or a credit entry? Okay. That means in these cases, all the sub transactions are causing the debit posting to the contract account. So when you define the sub transaction, you have to say for which main transaction you are defining the sub transaction and what is the nature of posting to the contract account. Is the sub transaction value debited to contract account or is it credited? Okay. Now, when you define this, you prepare a FICA document. So then while posting, what will happen? The total amount will be debited to the contract account actually. Okay. But when you're directly posting in FICA, it cannot consolidate. Okay. It will consolidate only if you're preparing ISC invoice or telecom invoice or SD invoice. Otherwise here, if you're directly posting to FICA, each sub transaction is considered as a debit entry. So it will directly debit individual value. One FICA document, multiple debits will happen to contract account. Okay. So eventually it is the amount what customer has to pay. You're not consolidating here, but individually debiting to the contract account. Okay. Now, if you are posting to any sub-ledger account, what is the requirement? The sub-transaction is not a GL account. The sub-ledger is not a GL account. It is a account created for basically two types of entities, three types of entity. One is the customer account, what is called receivable account, and there is a vendor account, which is a payable account, and third is the asset account. But here you are not using any customer account, you're using contract account. So the contract account is receivable. That means when you prepare the main transaction or when you're posting a document in FICA, which account we are posting, that has to be entered. Okay. That means we are basically creating the FICA document for a particular contract account. To that account, the values have to be debited. Okay. So when you are posting to any subledger account, you have to parallelly also post to reconciliation account. Reconciliation account is a GL account, which is maintained in our books of account. So basically it will carry the cumulative values. That means every time you post to a contract account, parallelly the amount is posted to the receivable account. But at the receivable account level, we don't get the line item display. At any point of time, we see what is the total amount you have to receive from the market. That's it. Okay. But how much amount, if let us say total account balance is showing 5 lakh, okay, that's the total receivable which is reflected in main transaction. Okay. But this 5 lakh could be because of posting to one account, two accounts, three accounts, or hundreds of accounts. Okay. So how much each account has to pay, that amount information will come from the account balance of the individual account holder. It is something like, our bank account. Every customer in the bank is having a passbook. Okay. Whenever you're doing any transaction with the customer, the account in the bank, the amounts are posted into our passbook. Suppose if I deposit some money, the amount will be credited to my account. If I draw some money, it will be debited to my account. If I ask for a checkbook, they are providing service to me. So the checkbook's charges are debited to my account. Okay. Or tomorrow, suppose some interest is calculated on the savings amount, what we have done, the amount is credited to my account. But these accounts are basically maintained by bank. Okay. It's not our account. It is actually from the perspective of the bank. Okay. Bank is maintaining an account for me, and for me for them is a liability account. Okay. So when I deposit the amount, it is credit to my account. Okay. So that's how you get a notion that whenever you do credit, amounts will increase. Okay. But that is not a correct perception. Actually here it is liability. Okay. It is actually credited. Credit and debit, although we understand with plus minus indicator, they are nothing like plus or minus. Every account is like a T structure. Okay. Sometimes you post on the left side of the account, then it is considered as debit. Sometimes you post on the right side of the account, it is called credit. Okay. But when you take the debit balance, we say total debit minus total credit, that is the balance. Okay. But for the bank account, for the bank, my account is a liability account. If I put the money in the bank, it's a liability to them because they have to pay the money tomorrow if I ask. Okay. So the amount is actually posted on the credit side of the account, because the liability has to be credited. Like vendor, if a vendor supplies some goods to us, the amount what we have to pay to the vendor is credited to contract account, the not contract account, vendor account. Okay. But in the case of customer, it is other way around. Okay. When you supply goods and services to customer, we have to receive the money from the customer. Okay. So we debit. Whenever the assets will increase in the operation, asset account should be debited. The customer accounts can be considered as the liquid assets. They are not fixed assets. Fixed assets means like, plant and machinery you have got. Okay. But in this case, every customer account is like a, liquid asset. If I supply goods to customer will pay the money to me. It is like a money which is there in the market. It is an asset. Okay. So whenever assets will increase, the account should be debited. Whenever liabilities increase, liability account should be credited. That's the reason the customer accounts are debited because they are assets. Vendor accounts are credited because they are liabilities. Okay, that is the accounting rule from the balance sheet. The assets accounts are debited, the liability accounts are credited whenever the assets increase or liabilities increase. Then the other two types of GL accounts will be the revenues and expenses. Whenever the revenues increase, revenue account should be credited, and whenever expenses increase, expense account should be debited. These are the basic accounting rules what you follow. Accordingly, account determination has to happen. Okay. So considering this process, okay. So basically, let us say for time being, we are not include them in transaction. So I'm preparing a main transaction receivable where I'm charging the contract account for a price of a product, 5,000 rupees. So actually what it means, this 5,000 amount should be debited to the contract account. It should be debited to contract account. And the same 5,000 rupees also has to be debited to a reconciliation account, The reconciliation account is a GL account, what you maintain in the financial accounting system. It's a balance sheet account. But this 5,000 rupees is a revenue to us. Okay, so 5,000 should be credited to a price account, to a price account, to a price account. That means we are making two important account determination. The contract account is debited. We know already account. Because of the account only, you are preparing the IFICA document. So that account will be debited with 5,000. But which reconciliation account I have to eventually debit to for the reconciliation account in financial accounting, and which revenue account I have to post the price. Okay, so that is what is called account determination. That means for every transaction, you have got a main transaction for which the reconciliation account is determined, and for sub transaction, revenue accounts are determined. But when you are posting 5,000 rupees to a revenue account, the tax has to be determined, because you are giving some you are doing some service to, you are supplying some product to customer or giving some service to customer. They are legally chargeable. Okay, so you cannot just say that, I'm going to credit 5,000 rupees to the price account. It should be always posted with a tax. Okay, so what is the rate of tax? That means you have to maintain what is the rate of tax in the financial accounting, and then for the tax amount itself, you have to maintain a tax account. Okay, tax account has to be determined. Let's say 10% is a tax. 10% is a tax. That means 5,000 rupees is the price of the product, plus 10% is a tax, that is 500. Okay, but when you are posting directly FICA, you have got a choice to say whether tax should be included in the amount what you're posting price, or it is extra. Okay, if it is inclusive, that means 5,000 is already including the tax. Okay, so while posting, what it will do, it will separate the net amount and the tax amount. So the price may not be 5,000, it may be 4,500 or something, and the tax is 500 rupees. Okay, so this 4,500 has to be credited to price account. This 500 has to be credited to tax account. So the total amount what customer has to pay is 5,000, that will be debited to contract account. But while debiting to contract account, it has to determine what is the reconciliation account. So when you post a FICA document, only one account is posted. Whenever you post any FICA document, it is not posting all the accounts immediately. That means we are not hitting the financial accounting straight away. Whenever you post anything in FICA, only one account is posted immediately. That is a contract account. But all other accounts are determined and the corresponding values are determined, and they are stored in the FICA document. So in the FICA document, you can see the contract account is debited to 5,000 rupees. Price account is so and so, for which 4,500 is the amount you have to credit later, and tax is the amount what you have to credit to tax account later, and the reconciliation account, for which again debit has to happen when you eventually transfer the data to financial accounting. So when you post into, whenever you post a FICA document, the FICA document is prepared, sub-ledger account document, and the effect of FICA posting is only only the posting will happen to the contract account. All other accounts are determined and stored in the FICA document with the values. Then end of the day, what to do, we close all these FICA documents, it will summarize the documents, and then we send the accumulated data to financial accounting. That's the advantage of using FICA. Okay, that means every time you prepare an invoice and post to system, you're not directly posting to financial accounting like in SD. Okay, in SD, every invoice you're posting to financial accounting. But if you're using ISU or telecom or insurance as a source, you are preparing invoice, no doubt, but you're not posting every invoice into financial accounting directly. The moment you prepare the invoice, it will first post a document in FICA. So if you have posted today 500 invoices, 500 FICA documents will be there. End of the day, we close these FICA documents. How we close, we will see. Actually, system will close for us, for which you use one parameter called reconciliation key. Okay. So once you close the reconciliation key, system will automatically, aggregate the values for the GL accounts, keep the data ready. Then we transfer the data to financial accounting. So instead of posting the account each and every time you prepare invoice, it will be posted only once in a day with the summarized value. Okay. How the summarized value will be calculated, we will see with an example. Okay. So basically, anything that you post into Fika is understood by definition of a main transaction and a sub transaction. And what we are referring here is the external main transaction and external main transaction and external sub transaction. Now, internal main transaction and internal sub transactions we cannot define. These are defined by system. They are relevant to specific process. Suppose miscellaneous posting you are doing, then there's no such internal sub transaction. Okay. For main or internal main transaction, internal sub transaction is not there if you are doing a sundry receivable. Okay. But tomorrow, suppose I'm posting a ISU invoice, consumption billing. Okay. There both external main transaction is there, internal main transaction is there, external sub transaction is there, internal sub transaction is there. The sub transactions are defined by system and they are coded actually. Okay. Some program is working for them in the background. Okay. Based on the internal sub transaction, it will know why the Fika document is posted from the system perspective. Okay. Like tomorrow, suppose we are posting a Fika document in SAP ISU, which is coming from ISU source, an invoice prepared because of the consumption billing. System will know that this Fika document is prepared because of the consumption billing invoice. Okay. But sometimes, let us say we are preparing a security deposit entry into the system. Again, it is posting to Fika, but this time it will understand the security deposit Fika document is posted. That understanding will happen in the system based on the internal main transaction, internal sub transaction. So at some point of time, we have to assign them together. Okay, external main transaction with the internal main transaction, external sub transaction with the internal sub transaction. So that is there for each and every system defined, internal sub transaction. But if you are defining your own main transaction, there may or may not be internal sub transaction. Okay, so that part we will understand. At this point of time, we will focus more on the external. At appropriate time, I'll also show you how the internal main transaction and internal sub transaction will come and what is their requirement, why they are used. Okay, so where are these transactions defined? Let's go and see. I'm going to utilities in the Fika 000. This what we're discussing is the heart of ISU Fika, or what we're discussing the Fika, the main heart of Fika actually. From here, the Fika main understanding will start. So we have to understand this part very clearly without any doubt. So go to financial accounting new, and then we are going to contract accounts receivable and payable. Go to basic functions, postings and documents. Okay, then the document. Now, what is this document that we are discussing separately? That is the document types, number ranges, and everything. Okay. But while posting the document, the transactions you have to know what transactions you are doing and the corresponding account determination. Okay. So let's go to the maintain document assignments. Here you have got maintain main transactions. Okay. Select here. Let us see the help file. What is the main transaction? It is saying. Now, according to SAP help, what is the main transaction? Okay. Okay. Main transaction for line item use. Main transactions and sub transactions fulfill the three functions. Okay. That means we are defining here in these activities certain main transaction, and for a particular main transaction we are defining one or many sub transactions. But what do they serve? These basically definitions will serve three important functions. They document which aspect of business transaction or process the line entry is based on. Okay. That means we are preparing a document to process certain line items. Okay. Now, what are the line items here? For example, I was saying price of a product, the forwarding charges, packing and forwarding charges, installation. Okay. These are basically line item. Each amount what you are charging to the contract account is a line item. Okay. So we are basically going to document what charges we are levying to customer. Okay. That's the basic purpose of the document. that is a line item what you call. They document which aspect of the business transaction or process the line entry is based on. A short description is assigned to each main and sub transaction for this purpose, and this can be used in the correspondence. In many processes, main and sub transaction can influence the automatic account determination. Tomorrow, suppose if you print out the FICA document and send it to customer, then they would know why the amount was debited to them, okay? For which reason the amount was debited and what charges have been, calculated. That description also can be maintained in the correspondence to the customer. So the customer would know what kind of invoice was prepared, why this amount was debited, what is the definition of the posting that has happened to my account, and also for that amount what charges were included in the document. That description will give the customer the proper meaning actually, okay? That's how we actually define the main transaction and sub transaction. A short description is assigned to each main and sub transaction for this purpose, and this can be used in the correspondence. But in many processes, it is not saying compulsory, but most of the time main and sub transactions can influence the automatic account determination. An internal main transaction can be assigned to the main transaction. An internal sub-transaction can be assigned to the sub-transaction. Internal transactions control the way in which application-specific processing programs run. Okay, it is not saying that it should be assigned, can be assigned. Okay, that means it is not necessary that you have to assign every external main transaction to internal main transaction. It's not compulsory that you have to assign every external sub-transaction to internal sub-transaction. But in application-specific processing means we are posting a FICA document for a consumption billing invoice, or we are posting an invoice in FICA for a move-out billing invoice, or we are posting in ISU a manual billing document for the invoice is posted, okay, or we are posting a budget billing invoice, okay. These are application-specific, invoices what you are creating, and then you are posting into FICA. So for such specific applications, like let's say, for example, you are posting a security deposit, or you have done the interest calculation you are posting, or you want to write off some amounts and then post to FICA. These are all application specific processing what you're doing in the system. For such requirements, you can make use of the internal main transaction in the sub transaction. The sub transactions differentiate the main transaction. Okay, that means each sub transaction we are assigning it to main transaction, but every main transaction can also have different types of sub transaction. Okay, for example, consumption billing invoice can have its own sub transaction, but tomorrow if you're preparing a budget billing invoice, it can have its own sub transaction. If you're posting a security deposit, the main transaction can have its own sub transaction, like that. Okay, so sub transactions actually differentiate the main transaction. If your application area is using main and sub transaction, then specify the appropriate ones during the document entry. Okay. Now document entry, it is saying specify them. That means if you are posting a document manually, okay. But if you are posting a document indirectly, that means not manually, it is posting automatically in the background. Okay. For example, I'm preparing an invoice and posting into FICA directly. Okay. In that case, as a user, I don't have to specify the main and sub transaction. System will derive them automatically based on the configuration. For this kind of document, this is the main transaction, this is sub transaction. How it will derive, we will see. Okay. But if you are posting directly an entry into FICA, like the miscellaneous receivables or sundry receivables, okay, in that case you have to specify the main transaction, sub transaction, then only document can be posted. Okay. Now, example, utility companies may use the following main transactions: budget billing, consumption billing, dunning cost. Okay. The budget billing main transaction could be comprised of the sub transaction: budget billing request, budget billing receivable, budget billing payment. Okay. That means budget billing request is a sub transaction which can be possible in one of the main transaction. Budget billing receivable could be actual posting, which is again under another main transaction, and budget billing payment could be another sub transaction in another main transaction. Okay, depending on the main transaction, we know whether you should use the statistical posting for the sub transaction actual posting for the budget billing receivable. Now, statistical posting we will see in future. What is statistical posting? In statistical posting, only BP items will be there or contract account items will be there, but it will not have any GL accounts. If you post a FICA document where the sub transactions are statistical, no account determination will happen. For that FICA document, you cannot post anything into financial accounting. Okay, that is basically called statistical entry. Okay, but if suppose the actual receivables or actual payments we are posting, then GL account determination will happen, and that FICA document we have to eventually post to financial accounting. But if the document what you're posting is having statistical item, then there won't be any GL account determination. Because there's no GL account determination, there's nothing to be posted into financial accounting. For example, security deposit I request. Okay, when I request the customer that you have to pay the security deposit. So I make a posting into FICA. There only I'm posting it to contract account saying that you have to pay this amount. Okay, but we are not posting anything that information to financial accounting. But when the customer actually makes a payment, we take it as a down payment. Their accounts are determined, and then you post it to financial accounting. Same way, interest. Suppose you calculate some interest on the overdue items, you debit the contract account, but that is statistical. Okay, it will not be available as an open item. It will be available as a statistical item. But you can use your statistical item for clearing purpose. Why statistical items are used? That information is required at some point of time in the future. It can be used in dunning, it can be used in the payment collection, but actually sub transaction itself will not have any account determination. Okay, so it is rather understood more easily when you do the process in future. We will see that. Okay, so this is what SAP is saying about the main transaction, sub transaction. Now let us go here. Okay, now most of the main transactions what you see here, these are all originally provided by SAP. Okay, but none of them are coded, none of them are having any special significance. Only fact is that these are already given in the SAP. We can make use of them straight away. Okay, and as you can look at them, they're all talking of a specific transaction what you're going to process. Okay, for example, you can see charges. Okay, that means you are posting some charges to the contract account, which could be like the charges pertaining to some interest calculation or something. Okay, now security deposit, you are basically preparing a FICA document posting security deposit. Main transaction is 20. Interest on the cash security deposit, that means first you process the security deposit for which you are posting a FICA document. After some time, maybe when the our security deposit is closed, you are paying the money back to contract account. That time, pro rata interest will be calculated. That interest for the cash security deposit will be posted using a transaction 0025. Okay, that means each of these main transaction you can see the basic description why FICA document is posted. Okay, or 0040 interest. Okay, the charges will come later. You can use it in various places, so that's why I'm holding on it. But interest is very something what you can understand immediately. 0040 is a interest. That means you are charging some interest to a customer. Again, interest sometimes can be credit interest, it can be debit. Okay, like in the case of cash security deposit, we are paying interest. Okay, the customer has paid us the security deposit, it is lying with us, it's a down payment. Because they are parking some money with us, legally we are supposed to give them some interest. Okay, so when you calculate the interest, it is going to be credited to contract account. Okay, but suppose there are some overdue items where the contract account holder has to make the payment, but they have not been paid over the period of time, even after the due dates are over. So we are saying if any overdue items are there, we will charge you some interest charges. Naturally, these interest charges we are going to debit to the contract account. So the interest itself can be debit or credit. That configuration you will do in the interest calculation rule. Okay, but the description of the main transaction is interest. Okay, like that you can see 50 is for budget billing statistical procedure, 51 for partial budget billing, 52 for payment run on schema. Suppose you are making any payment on account. Let's say I in the cash desk amount processing, customer paid some amount. I could not locate exactly for which open transaction I want to clear. So I'll deposit the money on account. Okay. On account means you are taking the money from the customer, putting into account, but straight away you're not clearing any open items. Okay. Later on, what you do, you use that amount to clear certain open items, debit entries. Okay. So on account payment, returns. Okay. Like say customer paid some check and check was presented in the bank, but we found the check was dishonored for various reasons, maybe short of funds or some technical reason. Okay. Now we are processing returns. Okay. By doing processing returns, what would happen? The clearing what we done earlier will get cancelled. It will again make a fresh debit entry for the open item. And for return processing, we might do some charges, bank charges or utility company charges. Okay. So returns means basically they are going to debit the items to contract account. So like this, there are so many main transactions which have been given, which are very much, if you look at the definition, they are very process oriented. Okay. And some of them have been assigned to internal sub transaction, internal main transaction. Okay. Similarly, collective bill and manual billing, suppose if you are doing then 0300 and the move out billing is 0200. Okay. In the case of payment plan in ISU, you use 0150 for carry forward amount. Okay. Account maintenance is 010, 610. Okay. So there's so many things which have been defined here by the SAP, but we can use them wherever some application specific posting is happening. Okay. But suppose if you are doing posting directly in Fika, for which you have your own reason for posting, then I can define my own main transaction. Okay. So let us define some main transaction here so that we can use it subsequently. So let me go to new entry. Our application area is R. That means in which application area you are posting in Fika. Okay. Because as you know by now, we know by now, the FICA can be for media companies, public administration, utility company, telecom, insurance, like that. Extended FICA. Extended FICA means non-industry specific solution. Like in general SAP, instead of using the standard account receivable, we are using the contract account receivable. That is extended FICA. Okay. But our system here is FICA. Our system is here utility company. So you have to select the utility company. Now main transaction. Now all our company code, everything we are defined with 5. Okay. We are defining it as 5 actually. We are defining it as 5, right? 55550. Yeah. So our company code is also 5. So let us say we start with 5. Our main transaction is 5000. And we will say this is miscellaneous postings, miscellaneous posting for receivable or sundry sundry receivables posting. That means directly I'm posting to FICA, and whenever I post, I'll use the main transaction 5000, by which I know the particular reason why I'm processing FICA document is this document will ensure I can collect some charges from the contract account by making a posting of the FICA document. Now we will save it. Now, this is a definition of the reason why FICA document you are preparing. But in the FICA document, some charges you are posting. So what are the charges you can post under a document? They will become the sub transaction. Okay. So now what we'll do, we'll go to define sub transactions. For every main transaction what SAP has given, they have also given sub transaction. For example, if you take 25 is for security deposit. So 20 is for security deposit. You can see here they're given 3 sub transactions: 0010 cash security deposit payment, cash security deposit request, cash security deposit tax request. Okay. In some countries, what they say, even the uh, the security deposit also you have to charge a tax. Okay. Like if you are charging 5,000 rupees to contract account, it is with tax, without tax. In some countries, tax is not applicable. In some countries, tax is applicable. Okay. So when you initially prepare the security deposit amount, the line item is 0020. We are requesting the customer account. Okay. But when they make the payment, we make a down payment entry using the 10. That is a deposit payment. Okay. But if you're going to calculate the tax for the security deposit, then it is a tax request. Okay. That means The security deposit is a 20 main transaction, in which what are the possible line items? It can be request, it can be payment entry, or it can be a request for the tax itself. So each sub transaction will have a line item. And for main transaction, sub transaction, you can maintain the account determination. Now, in our case, we'll define some sub transaction. Application area R. Our main transaction is 5,000, what we have defined. So here we will say 5001. This is one sub transaction. Again R, 5000. Again 5002. And then R, 5000. And then 5003. And then again R, 5000, 5004. 5004. Let's say 5001 is the price for product or services. Product services. Then 5002 is basically installation charges. Let us say 5003 is for packing and forwarding, like transportation charges. And 5004 is, let us say, consultancy charges. So like this, I'm defining here some sub items. Now, the 5000 is the main transaction where I'm saying I'm charging to the customer, okay? I'm charging to customer. That means I'm debiting to the contract account. Sometimes I have to make a credit entry, okay? I have to credit some amount to the contract account. In that case, the basic posting will change, okay? So now what I will do, maintain main transaction. I'll define one more main transaction here, application area 5001, main transaction 5001. Here I will say credit memo for the contract account. Create a memo for the contract account and then save it. Then for this also I have to give a sub transaction. So application area R, the main transaction is 5001. So here I will say sub transaction 5005, credit for price, or credit charges. I'll simply make credit charges and then save it. So like that, I can again under the main transaction 5001, I can have many sub transactions. But basically what you're saying, individual amount what you are calculating line items, they'll be credited, okay? But how will the system know a sub transaction will cause a debit entry, a sub transaction will cause a credit entry? That will come in the definition, what we're going to do, okay? So now we will save it here, then come back. Now, when you define this here, this data is a client level information, okay? That means it is valid for all the company codes, application area in our system, okay? Here, when you defined it, we are not defined categorically for any company code, for any division, okay? It's a client level data, okay? But in order to use it in our posting, because at the end of the day, we are going to post into a company code. Eventually, everything has to go and sit in the company code, okay? So these main transactions, sub transaction, whatever you have defined, we have to assign to our company code, okay? Now, there are two possibilities. If you're using ISU origin as an invoice posting, then then division will come into picture, okay? That means you can assign the main transaction, sub transaction to company code and division combination. But here I'm not posting with respect to any contract at the moment. Division means contract will come, okay? So I use only company code as a parameter. I'm not using any division as a parameter now, okay? If division is used, then definitely there should be a contract. Without contract, you cannot do any posting into FICA. Whether you do manual posting or automatic posting, there has to be a contract, okay? So since we are not still ready with the contract definition in the master data in ISU, we will use assignment to only company code, okay? So that means using this main transaction, sub transaction, we'll be posting into our company code. So now we'll go to maintain transactions for ISU. Then select here, maintain transactions for billing. Actually, SAP has given transactions for charges, cash security deposit, down payment, interest, okay? But doesn't mean that you are specifically maintaining the assignment of main transaction, sub transaction only for budget billing or interest, okay? If you select, the complete list will appear here, for which you can do, but only for authorization specific. Suppose in FICA consultant somebody is authorized to maintain for budget billing, then they can use it. Okay, but otherwise you can assign in any of these transactions to your company code and division. Okay, so generally you can select here maintain transaction for billing, but here you can see all the main transaction, whether it is the charges or security deposit, everything will appear. Okay, now here first configure maintain attributes for company code and the division. Okay, configure general settings. In configure general settings we can see our main transaction sub transaction will appear here. Okay, so our main transaction here is basically 5000, 5001, 5002, 5003, 5004, 5005. That means unless you define the main transaction sub transaction, you cannot come to this particular configuration, because you have to eventually assign to company code. There must be available data for this particular main transaction sub transaction. Directly cannot enter here. It has to come from the previous definition. Now let us 5000, 5001, and then select the maintain attributes for the company code and the division. Okay, select here, then select the new entry. So what is our company code? Our company code here is 5000. Okay, our company code is 555. Now division I'm not entering. Short text I'm saying the debit entry. So here debit entry, I'll say debit entry. This is sundry receivable. Okay, I'm making it as sundry receivable. What is the main transaction? Our main transaction is 5001. 5000 is the main transaction. That is basically sundry receivable. What is a sub transaction? The sub transaction is what we have defined. That is 5001. Okay. Now, is it going to be debit or credit? We are charging customer some price. That means customer has to pay the amount. So naturally that amount has to be debited to contract account. This debit and credit should not understand from the account posting, the GL account. It is always with respect to the contract account. That means if you calculate any charge for this 5001, the amount has to be debited to contract account. So enter the debit. Okay. That means tomorrow, suppose I charge 2000 rupees, 3000 rupees as the price of the product. Okay. That price has to be debited to contract account. But when you're debiting the contract account, the price itself has to be credited to price account. Okay. That means for 5000, we are maintaining reconciliation account, and also the 5000, the contract account is posted using main transaction debit entry, the price amount. Okay. But price is basically a revenue. That revenue account also has to be determined. That will be based on the 5000 sub transaction. So for 5001, we are going to maintain the revenue account determination. So it is debit posting. Now you can say continue and then save it. Okay. So, and also here we are saying manual posting is allowed. Okay. That means this posting directly we are doing, into the FICA directly. Okay. It's not coming as automatic. Automatic when it will come, suppose I prepare an invoice in ISU and FICA document is posted. There I'm not posting FICA document. The moment you run the invoice and save, directly it is posting into FICA document. So there the main sub transaction what you're using will be automatically posted into FICA, not to the manual. But here I am making an entry into FICA directly. So manual posting is allowed. So now we will save it and then come back. Now let me select this particular line and then copy. Okay. Now I'm saying debit entry, sundry receivable, then 5002. What is 5002? Installation charge. Specify key within the main, sub transaction. So again, debit, it's not taking. So we'll come out. So we'll again go to main again, select here. Then select the configure general settings. So here we'll select application area R 5000. So here 5002 I'm taking maintain attributes for the company code and the new entry. So company code is basically 5555. Short text I'm saying debit sundry receivable. Okay, sundry receivable and then main transaction is 5,000 and here 5,002, and it is going to be debit entry, manual posting is allowed. Enter and then save it. Actually, we have to change the description of the short text and long text. We have done and then save it. Now we can also give here debit entry, but here we can also make it more specifically installation charges. Okay, installation charges, and then save it. Similarly, for the earlier one also we'll change it, price. So select here and then select company code 555 5000 and then 5001. So select the particular line and see the detail. So we will say sundry receivable prices and then save it. Likewise, I can go to again select the configure 5000 application area R 5000 and then sub transaction 5003 packing and forwarding, maintain the attributes and the new entry. Company code is 5000 and then division I'm not using, debit entry. So sundry receivable packing and forwarding. So main transaction is 5000 and the sub transaction is 5003 and it's a debit entry, manual posting. Enter. And here main transaction, okay, this is 555. Our company code is 555 and then save it. Come back. Again, select the last one. Actually, you can copy also, but at the moment we are, let us see whether I can copy it. So 555. So 555, but these are, main transaction what already got copied because of this will require in the future when you're doing security deposit charges. Here, since you copied from 0001, it has copied the main transaction, sub transaction assigned to 0001 company code. They will be required in future. That is for the process oriented posting. Okay, but right now we are doing sundry receivable, our own FICA document. Process is defined by us here, but the existing transactions process is already defined by SAP. You can understand that way. So our main transaction is 5000 and company code is 555 and then select here 5003 and then you can copy. So debit sundry receivable consulting charges and then it is 5004 and manual posting is allowed. Okay, and then save it. That means we have maintained for all the possible combination the data 555, main transaction is 5000. So we have got 4 possible sub transaction 501, 5002, 5003, 5004, and basically all these 4 are basically causing the debit entry to the contract account. Okay, now I will maintain also for credit posting. Okay, so go to again configure general settings. This time I will select application area R, main transaction 5001. Okay, for which this is a sub transaction. Maintain attributes for company code, a new entry. Company code is 555 and then here I will set credit posting to contract account. The credit charges. Main transaction is 5001 and the sub transaction is 5005. Now this time I will select it as credit. Okay, and manual posting allowed. Enter and then save it. So whatever main transactions, sub transactions I have defined, I have now given them to the company code. So basically there are 2 sub main transaction. For the first one, there are 4 sub transactions. For second one, 1 sub transaction is available. Okay. Now, whenever you're posting it to FICA,